Dear students, I hope you all are following our classes correctly. Today we will discuss realization account, how to maintain the realization account. Okay. In First of all, we have to understand that what is mean by a realization account. When one firm is get dissolved, then all the assets should be realized. That means assets should be sold off and liabilities should be paid out, and these two process must be happened. And for this purpose we are making an account that is called a realization account. Okay, and first of all we have to uh, transfer all assets and liabilities to the realization account. Assets should be transferred to the debit side of the realization account and liabilities should be transferred to the credit side of the realization account. You can see in this account, realization account, debit side, intangible assets, land and building, plant and machinery, furniture and fittings, loan to the other parties, bills receivables, sundry debtors. These all assets are correctly transferred to the realization account. And credit side, you just see the credit side of this realization account: bank loan, mortgage, sundry creditors, bills payables, bank overdraft, outstanding expenses, provision for doubtful debts. These all liabilities also transferred to the credit side of the realization account. Okay, and these both values you will get from the balance sheet which will be given in your question paper. Okay, in your question paper there will be a balance sheet, and in that balance sheet you can see the assets and liabilities. Assets should be transferred to the debit side of the realization account and liabilities should be transferred to the credit side of the realization account. Then after that, when all assets are sold out, that cash, that bank cash or bank, that amount should be right on the credit side as cash or bank, and in bracket sale of assets amount should be written on the credit side. And the same way liabilities, all liabilities should be settled. That amount should be right on the debit side. See here, uh, cash or bank payment of liabilities, cash or bank payment of unrecorded liabilities. All liabilities are settled out. Okay. Then after that, there will be uh, some more things is there. That is, sometimes any one of the assets may be taken by any partner. Then that particular assets value we have to adjust in that particular partner's capital account. Once again I tell you, uh, if one partner is taken one asset, suppose one partner wants to take one machinery from the firm, then the value of that machinery, the value of the machinery, or at which price the partner taken that machinery, that value must be adjusted in the particular partner's capital account. And here credit side you see partner's capital account in bracket assets taken by the partner. Okay, it is not compulsory that all the assets should be sold out. Maybe some partner may take the assets. Okay, and the same time some other partners may take the liabilities also, take the responsibility to pay the liability also. Then we have to write on the debit side that also must be adjusted in their capital account, that particular partner's capital account. Okay, who is taken the liabilities, then we have to adjust that liability in the particular partner's capital account. Here see, partners the capital account debit side also will be given, then liability assumed by the partner. Okay, that is after that we have to balance this account. Sometimes profit may come, sometimes loss also may arise. So if loss arises, then also we have to transfer it to the all partners capital account, or loss can be transferred to the partners investment fluctuation fund. And if there is a profit in the realization account, then the profit also must be transferred to the partner's capital account in their profit share ratio. In this case, there is no sacrifice ratio, no gain ratio, nothing. Because firm is going to be wind up. That's why there is no sacrifice ratio and there is no gain ratio. Only the profit share ratio, the profits of the realization account transferred to the capital account of the partners. Okay. One numerical question also we will discuss today. That is illustration 1. In this question, three partners are there. Supriya, Monica are partners. Two partners are there. Supriya and Monica are the partners. And these people are sharing their profits in the ratio 3:2. Okay, and balance sheet also given. So balance sheet means asset side, you see assets are there, stock and sundry debtors and fixed assets, clearly given the assets. And liability side, only one liability is mentioned there, sundry creditors. General reserve must be transferred to the partnership capital account, okay, in the provision ratio. And some adjustment also. Debtors realized at a discount of 5%. So that here debtors how much? 21,500 debtors. Okay, total amount the people owes to the firm, that is 21,500 rupees. 5% we have to take, that is 1,075 rupees. We have to minus from the sundry debtors because we have given discount. Okay, we have given discount, so we have to minus 5%. And next, stock realized at 7,000. Stock realized at rupees 7,000. Then stock 7,500. How much we got? We got only 7,000. And fixed asset, how much we got when we sold out? 42,000 we got. Okay. And realization expense 1,500, and creditors paid in full. That means how much amount creditors? 48,000 we have to give. Then 48,000 completely we paid. So these are the condition. Then record this all the transactions in the journal entries at the time of dissolution of the firm. So realization amount, how much? Realization account, first we have to transfer the assets. See here, stock, sundry debtors, fixed assets, these all assets are transferring to the realization account. Okay, stock how much? 7,500 is given in the balance sheet, and sundry debtors 21,500 is given in the balance sheet, and fixed assets 36,500 also given in the balance sheet. This all the assets are transferred to the debit side of the realization account. That's why a realization account debtor to stock, to sundry debtors, to fixed assets. Okay, and next step is liabilities. Here two liabilities are there. One is sundry creditors and the provision for doubtful debts as also liability. Provision for doubtful debts 500 and sundry creditors 48,000 transferring to the credit side of the realization account. That's why the journal entry is sundry creditors account debtor, provision for doubtful debts to realization account 48,500. And bank account to realization account, how much amount we got when we realize the assets. Okay, asset realized, then how much amount we got? Already given in the question here in the adjustment, it is given how much amount we have got. Fixed asset purpose 42,000 we got, and stock realized 7,000 we got. We have to add these all things, and debtors all amount we got except 5% discount. So this all amount we calculated and add together, then what we will get? 69,425 rupees we will get. Okay, how we are getting this one? Adjustment, it is clearly given. Fixed asset 42,000, stock realized 7,000, and debtors 21,500 minus 5%. Okay, 5% of 21,500 we have to calculate. Okay, you will get the realization amount. Then next journal entry, realization of bank creditors, complete money we given, and the realization expense also we paid. Okay, creditors liability, creditors amount we paid, at the same time realization expense. That means for realizing these all assets and liabilities, there will be some expense that also we paid completely. Then next, we have to balance the realization account. Then we will get a profit. Here in this question we are getting the profit. That's why profit transferred to the capital account of Supriya's and Monica's capital account. Realization account letter to Supriya's capital account to Monica's capital account. Then general reserve also transferred to the capital account of the partners in profit sharing ratio. And uh, finally, how much amount each partner is going to get, that we are paying Supriya's capital account and Monica's capital account to bank. 60,425 rupees total we paid. Okay, and here realization account, transfer the, then posting that journal entry here, then you will automatically you will get this one, assets transferred and liabilities transferred. Then how much realization amount we got, 69,425, and what are the payment we did, creditors 48,000, realization expense of 1,500, and balancing after we got 2,925, which is proportionally given to the Supriya's and Monica's capital account. Okay, then partners capital account, what purpose we are making? Because we have to give the money to the money back to the partners capital account. That's why the capital, the amount of Supriya's is totally previous balance we have to write, reserve fund we have to give, realization profit we have to give. That means the total Supriya's 42,355 rupees, 42,355 rupees we have to, the firm has to give Supriya. And Monica, previous balance of capital 11,500, reserve fund share 5,400, and profit of the realization 1,170 total. Monica will get 18,070 rupees. Okay, this one we have paid so to bank. Then the account is settled off. Now the realization account we discussed, and how we are paying the balance. Okay, how we can write the journal entries, and what are the format, what is the format of realization account. This all we discussed. Hope you understood me your doubts. Anyway, you have to strictly follow the classes and try to understand clearly these all things. Okay.